Namaskar and good morning. Friends, I am Vijay Mohan, stock market strategist, again coming before you. Of course, I have been watching all the results, but most of the results were not to my expectation and my satisfaction. But I have been shuffling my portfolio a little bit based on the results. Still, the result season is on. So, in between, whatever I feel as good or whatever I feel as necessary for you to understand, that I will bring before you. The first one like that is Meghmani Finechem Limited. So its parent company was Meghmani Organics Limited. Now Meghmani Finechem Limited is itself a bigger company than Meghmani Organics. It is headed by Maulik Patel. It is at in Gujarat, Dahej. It is India's fourth largest manufacturer of caustic soda, chlorine and hydrogen, and expanding further. So leading manufacturer of caustic potash, chloromethanes and hydrogen peroxide. Meghmani Finechem it came from Meghmani Organics. Now it is having its own subsidiary called Meghmani Advanced Sciences Limited. Its facilities at the Dahej are very state of the art, modern, up to date, and it has gone in for backward integration, forward integration and automation. It is continuing, that process is continuing, and it is further expanding into chlorotoluenes and its value chain. Chlorotoluenes, there are also backward and forward integration, other products coming out of it, etc. And it wants to strengthen its position in specialty chemicals. Now let us look at the highlights of the company. Financial revenue growth was CAGR 32% for the last 5 years up to FY 2022. It has commissioned 60 kilotons per annum hydrogen peroxide plant in July 2020. It has expanded its caustic chlorine capacity to 294 kilotons per annum. Its CPP to 96 megawatts in June 2020. So these sort of expansions have become a regular and continuous feature of Meghmani Finechem. That is the major attraction of Meghmani Finechem. See, throughout the current year and throughout the next year also, there are many expansions coming. So the revenue for the last year, that is FY 21-22, was 1,555 crores, but it wants to reach 5,000 crores of revenue within 3-4 years. So revenue for Q1 quarter is 535 crores, previous quarter Q4 501 crores, and last year Q1 291 crores. So revenue has improved impressively. Profit after tax 108 crores compared to Q4 99 crores and Q1 last year 37 crores. So here also very impressive. Revenue growth is impressive. Profit after tax, both are impressive. Top line is impressive, bottom line is impressive. Equity is 41.55 crores. Diluted EPS is 25.94 rupees. Market price is 1,401. It is falling down. Despite very good performance, it is falling down. Price earning 14.7. Of course, consolidated and standalone both are approximately same. And Q4, that is now Q1, Q4 was balancing figures. That we need to keep in mind. The market cap is 6,205 crores. Current price 1,401. 52-week high was 1,659. 52-week low was 386. Book value is 225. Not bad. Dividend yield is zero. It is not paying dividend. That is a negative point for Meghmani. Lot of revenue, lot of profit after tax, but no dividend. ROCE is 29, impressive. ROE, return on equity, is 31.2%, that's also very impressive. And face value is 10 rupees. So far what we see is results are impressive. There is no doubt whatsoever about that. So the company is reporting very good revenue and very good profits, but not paying the dividend. So probably company wants to capitalize the interest cost. Now, if you look at the cash flows, cash from operating activities 484, cash from investing activity minus 455, which means it is into installations, etc., expansions, etc. So the minus 455 is indicative of that. Cash from financing is plus 195, net cash flow is 24. Now debtor days in the last year was 60, inventory days 74, days payables 42, cash conversion cycle is high at 92. Cash conversion cycle is needs to be reduced. Working capital days is 26, that is reasonably okay. ROCE 29% is okay. Now if you come to shareholding, promoters holding is 71.11%. FII's holding is 1.38%, it is going up. FII's holding is going up. DII's holding 0.22, it has come down slightly. Government 0.02, same as last quarter. Public 27.27. So a few other operational highlights if we want to look at plant utilization increased to 94% in Q1 from 87% in Q1 of last year. From 87% to 94%. Quite impressive. Capacity utilization for chloralkali is 94%. CMS at 105%. H2O to 94%. Caustic soda 104%. Caustic potash 130%. CMS sales realization up by 23%, but H2O2 down by 7%, it is insignificant. Revenue up by 84%, higher sales volume, etc. of 5%. EBITDA doubled to 187 crores, margin up 35%. Profit after tax increased 3 times to 108 crores. PAT margin is 20% compared to 13% in Q1 of last year. From 13% to 20% it has gained. That's very good. ROCE and ROE also improved to 33%, 48%, which is very impressive. But last year it was 19% and 22% only. Now strategic updates are there. Epichlorohydrin was commissioned on 1st June, which means Q2 will have some extra sales from epichlorohydrin. India's first epichlorohydrin plant, India's largest CPVC resin plant, commissioned on 18 July, and it is commissioned within the timeline and capex cost. Once stabilized, it will contribute in a big way to the top line and bottom line. Caustic soda expansion project likely to be commissioned in second quarter. So the company has entered into a joint venture for 18.34 megawatt solar hybrid power plant to be commissioned in Q3. Maulik Patel is very happy about all these expansions getting commissioned in time and within cost. Record operating and financial performance in Q1, he says. High realization, volume growth from all products, he says. All this is correct. I don't disagree with him. But why is the price falling instead of gain? See, profit after tax has gained 3 times, he says, right? But why it is the price is not going, market price is not going up? That is what he also should think about. Now Q2 will have some expansion schemes realizing additional revenue. Q3 will have further revenue, Q4 further. So the revenue will go on increasing. Bottom line also will grow on increasing. But investors want to see increase in price. Anyway, you are not giving any dividend. Dividend also should be must. So, Meghmani Finechem is a good company, great company. It is likely to become double, triple in size in 3-4 years. So, worth buying, that's what I feel. But you consult your other financial advisors, etc. You make your own calculations because the price is not moving up. See, that is the problem. In fact, the price has moved down in the last 2 months. That's the problem. Thank you for listening. I will be back with you with another reasonably good company. Thank you.